we're still kind of in that range from last Friday's sell-off. We can see where the market started selling off last Friday. It was around 673 to 674. It posted that low down around 646. So we're still in this overall large range. Now, there are a lot of levels mixed in the middle of this range. Like you said, Mike, last week was extremely choppy. Pretty much every day was the opposite. You know, on Thursday, we fall off like crazy. On Friday, we make a great comeback. There's a lot of insane up and down action. Just keep that in mind. I personally really like the support close to 653 to 654 on Friday in pre-market. What I'll be watching for is to see if this overall trend breaking last week of higher lows still comes into play this week. If we start to break that 670 point, that's where we might have to start adapting back to the upside. And hey, if we keep getting positive comments about Trump saying that these tariffs aren't sustainable, then that might just be the icing on the cake. But as we know, every single day is different. Like when we have any updates related to this US-China trade war, that is what really controls the market action on a day-to-day basis. One thing that I thought was kind of interesting as we are on October 19th today is actually the 38th anniversary of the worst single day in history for the U.S. stock market. Black Monday 1987, we saw over a 20% drop. I just thought that was a little fun fact for today. But in other more specific news, we can see that the S&P 500 is in a situation where the VIX has been increasing a lot lately. Even though the market itself is still right near all-time highs, this generally is a somewhat worrying sign because when you see the VIX increasing, it shows that smart money is expecting the market to be more volatile going forward. But we could see in a historical sense, this does tend to be a good sign, especially for like 2, 3, 6, and 9 months later. Sometimes we see a little bit of chop in the short term, but it's really not that bad. Now, of course, there's a lot of craziness going on right now, so the VIX could keep jumping, and, ultimately the SPY could end up falling down. Obviously, it's all going to come down to what Trump says. And ultimately, watch that Truth Social account, because that's where a lot of the action comes from. Another thing worth keeping in mind is that we are in a market environment where people are basically all in on stocks. Fund manager cash allocation fell to 3.8% in October, the lowest level in 12 years. People are buying up stocks like crazy, which helps push the market higher. But when the market starts to fall, it can get violent quickly because everyone is overexposed. This type of data shows sensitivity when markets drop. Some plays to watch this week include GLD on a bearish radar, CRML for a bounce play, RGTI to the downside, and NVIDIA watching for a break above 185 resistance. Momentum plays include PayPal, PYPL, to the upside above 67.70, NVTS to the downside under $14, and Moderna, mRNA, down under 25.70. These setups are volatile, so risk management is key. Protect your capital, focus on smart trading habits, and check the Key Lessons channel in Stocked Up Discord for guidance. Finally, today's $2.55 million big money trade, ticker OK. Trader bought 150 strike puts expiring March 2026. Despite Oklo's rise, it brings in zero revenue and has a $24 billion valuation. With the AI bubble growing, this setup mirrors past hype cycles like Zoom during COVID. These overvalued stocks could face steep pullbacks as optimism cools. Oklo and similar names remain on close watch for potential corrections.